Hello, my name is Gilbert Clark. I'm the Executive Chairman of Meridian Mining. We're developing the giant Cabaçal copper gold VMS deposit in Brazil, Mato Grosso, and we also own the entirety of the Cabaçal VMS belt, or almost the majority.
Gilbert, good to see you. Thank you for the introduction. Here we are at the beginning of 2023. The copper price has shot off. The gold price has shot up from 1650 to 1920 odd, 1930. But last year was a shocker, huh? It was a really bad year for the markets.
It was the year of sailing into the strongest headwind in 20 years for Meridian. We started, I think in February, we had a 4-month hold trading date come off, and then in Q2 and Q3, as you said, Merlin, the copper and the gold just completely imploded from market, but there was US banking on that one. And then we had 2 warrant terminations.
Okay, so the warrant terminations and the 4-month holding date, does that mean that suddenly people were able to sell that they could just lock in a profit, and they just kind of they dumped the stock because it was just kind of, in a sense, free money?
Well, it's like the liquidity events. So people think, well, look, this liquidity is coming into the market from Meridian, and it's going to affect the share price. And it was frustrating because, you know, in the placement that we did in 2021, that was very tightly held. That wasn't coming out. And then the warrants, the majority of the warrants had already been converted for the July release, the termination date. And it was the same again for the December one. So we had, you know, we've always been very careful how we manage our equities. But when you've got really Q2 and Q3, I don't know, in my experience, you know, that's probably the worst September in 20 years I've ever seen. Everything just disappeared. There was, you know, it was risk off. The buyers disappeared in Q2 and Q3. Institutional investors weren't deploying capital. They, you know, it was batten down the hatches and let's see what happens.
What price did you do the capital raise in September in 2021?
In September 21, we did it at 70 cents. I think it was 70 cents or 75 cents, and we did it without a warrant. And then we went into 2022 very strongly. And then you just see that we tracked all of the copper indexes, all the gold indexes, and they just collapsed in Q2, Q3. And we actually then did another raising in December, and it was a very nice window for us. But there was a couple of external influences we had to take into context. So we actually went ahead and did this raising that sort of set us up for the start of the year. Again, you know, we transferred out of being a junior listed company with these warrants, which are very problematic, as we saw in 2022. We did that again. We did that raising. So we came into 2023 and we cleaned up the capital table. We've now got a very clean structure. There's no 10, 20, 30 million warrant overhang. That's all been cleared out. There's a little broker warrants, but we've come out, I think it's about, 202 million shares on issue, fully diluted about 218. That's the stock options for the team. Money in the bank, expanding resource. And we should be putting out our PEA in sort of end of Q1, sometime in Q2, early Q2. So we've really sort of cleaned up the capital table and launched the project.
You raised $5.9 million in December. What price was that?
It was at 35 cents without a warrant. So we dropped
35 cents.
Yeah. It was
go on.
Oh, I was just saying, look, there was a couple of external influences in that. What we looked at is we had one of our historical shareholders from the restructure, private equity fund, and that previously that quarter exited 2 public positions, and this was known they were exiting their positions, so they didn't want to wait and then sort of go into the new year knowing that there was a potential large liquidity event and trying to raise money. So we made the decision. We actually we announced 3.2, and I think we're at about 2.9 pre-opening, and then within 48 hours we had up to 5.9. Again, we had multiple new funds come into the raising. So most of it again went into existing funds, and multiple new funds and other funds topping up their position. It's really interesting how we've seen the transition of this capital table from being almost majority retail, and now I think we've probably got north of 15 positions at institutions.
And did you when you gave me that figure of 5.9, was that does that involve the kind of the cross that you're effectively talking about? Because there was one fund that wanted to leave and other funds that wanted to join. So what was the kind of the net cash to you?
Well, the net cash for us is probably just over 5, and because we did it at 35 cents, that means we also did it above the warrant conversion date, which was happening at the same time. So people converting their warrants were actually seeing they were getting a premium for it. So that was good for us, because we're seeing the trend get the maturity of the capital table now into sort of like an institutional stock, but we're not ignoring our retail minority shareholders. We're ensuring that they're protecting their equity, because that's also the equity of the board. And then we went in the first week of December, which was a very busy week. We did quite a quiet week. We went to our listing institutions that are long-only funds, and we said, look, this is what we want to do. We want to cross this block of stock and put it and take that potential willing selling liquidity out of the market. And that's what we did. We crossed 5.9 million shares and we did 6.6 million shares that day. But what people haven't understood is that was potential liquidity to be dropped into the market. So we said, hang on, let's manage our equity, put that in the long-only supporters that actually just put money into the company, so they're not getting money for old rope. They're increasing their positions. And gone. All of a sudden, people are thinking, oh, this liquidity is going to come out. I can buy the stock later.
Good. I mean, I have to, in your defense, it wasn't just the companies that had warrant overhangs that sold off in 2022. It was a kind of a resource sector wide phenomenon, as I'm sure you're aware. It was interesting. Also, a feature of 2022 was that news releases were generally dimly received, as in you would put out exploration results, or one could put out exploration results and see your share price come down. Certainly when it came to your resource release, which was I think in September, that was late September, it was very poorly received. You were up at high 50 cents, and when the dust settled you were down at kind of 40 cents. So it was a kind of a the market didn't like the resource that was offered up. I think the headline.
You're absolutely right. The general commodity market, and it was, it's gone from being a copper focused project to being a gold project. There's 2 dozen gold projects out there. But what we've said all the way along, this is a copper project. The reason being, we have a very high grade gold overprint, and that infuses the deposit with valuable metal. But when you go to process these, and we've put this into the market, of our potential revenue, 20% goes into a gravity circuit for gold or doré. The 80% of the revenue goes into an exceptionally clean copper concentrate, and these things just don't exist. So if you're a smelter or a trading house and you want to buy a copper concentrate that's pure, high grade, great sulfur, highly payable precious metals that you want to blend with a dirty concentrate or with a low grade concentrate, this is perfect. And that's the great quandary of this project. We put out, I wrote it down here, 54 meters at 2 grams gold plus 0.3 copper. That's the gold, but it doesn't. It's not like a gold mine. It's actually a copper concentrate that we're focusing on. So we have this fantastic project. And when we did our resource, it's interesting you quoted those numbers, because they're almost the same numbers that we use in the resource. We use 1650 for gold and 359 for copper. And we will do those numbers, of course, in our PEA when that's published. But we'll also publish that number, PEA based on those numbers. We'll also have the spot numbers, and it's daylight. We have a very robust deposit, and I think the commercial attributes, when we demonstrate them, are going to take the market by storm.
Okay, so your last year the resource was published, and on the back of that you're doing an economic study, which is a PEA, a preliminary economic analysis. And you're quite advanced on that. What's your? I see it's Q1, but can you give me any granularity on that?
Q1, sort of end of Q1, start of Q2, I think is the time frame. We did what we have to look at the PEA. This project had 4 years production. It's a high-grade selective underground mine, and we reflected the processing that they did in our metallurgical study. So what we're focusing on is targeting a 2.5 per annum mill, open pit, starting surface. And we have a very high-grade zone, which we think will facilitate the rapid payback of any sort of debt component in project finance. But when you look at the size of that resource, and a couple of the guys that follow us, the analysts, a couple of banks, Beacon, Raymond James, Cormac, the analysts, they're the good guys. They're the same as me. They've clicked on. You'll probably start at 2.5, but then you'll upscale this in years 4 or years 5 to 3.5 or 4 million tonnes. And that's absolutely what I think we will be doing. The PEA would demonstrate the robustness of the resource at 2.5 million tonnes, but it'll also give us the platform to trigger.
What cutoff is your kind of a base case for the PEA? Because if I look at your presentation at the moment, your corporate deck, one of the first slides that comes up is you've got different block models at different cutoff grades. And the resource that you ran with in September was at a cutoff of 0.3 grams a ton, and that was the 59 million tons of indicated, which kind of spat out as kind of a global grade of global resource of 1.8 million ounces at 1.1 gram per ton gold equivalent. And then bottom right, you've got a cutoff of 1 gram a ton, and you've got over 1 million ounces at 2.3 grams a ton. So I just wondered where you're.
Yeah, it's really, really interesting. There's two answers to that. Now, as you look at the presentation, you see as we increase the cutoff grade, the tonnage decreases, but the grade increases. Now, if you overlay that with the density of angled drilling, you almost get a reciprocal relationship. So and you've got to remember that 70% of our database is biased by the vertical drilling. And the vertical drilling, like in the last announcement, hole 205, we just quoted beforehand, that we had 52 meters, 2 grams gold. The highest grade interval in that angled hole, we hit one of the vein structures, was 72 grams gold or something. The highest grade interval in the vertical hole is 1.65 or thereabouts grams per ton gold. So where we see the density of the drilling, we've seen a reciprocal. So as we increase that angle drilling along the deposit, I think we'll see a great kick. Now, the question is, you quite correctly, we said, this is a little bit technical, but we'll sort of simplify it down. We used a 0.3 resource. But when we do our whittle optimization is actually going to prioritize the highest grade blocks. So within that resource area. So my feeling is you'll see from 0.2 up to about 0.35 will be, because and this is a reflection of the very good metallurgy, that'll be stockpiled as end of mine reprocessing material, blending material. Then everything above 0.35 will go into the ROM, which will then be low grade, medium grade, high grade, standard sort of production scenario. So although, it's a very interesting question. We've got probably 40 million tons at 1.3 grams, 1.4 grams gold. And we're actually seeing that as we drill more angled holes, we're introducing more metal into the resource, the potential future resource upgrade. So keeping in mind, we've got, I think it's 28 million tons of inferred material, because we didn't spread the grade, and this is a trap people make. But at the same time, in that resource outline, there's about 30 million tons of unclassified. That means we didn't have any drill hole data. We can see the trends of mineralization, but there's no data. So there's 30 million tons within that deposit that we have to yet drill out to put metal into the ground. And we did that. We announced that last year, I think, hole 193. It was 15 meters, 1.8, I think it's circa 1.8% copper equivalent gold. But that was a nigh on 700 meter trend of unclassified material starting at 20, 30 meters below ground. So there's lots of growth.
Sorry, I'm getting a bit confused here. You've got Cabaçal is 1.9 kilometers long, and that's you've got your resource in that 1.9 kilometers, and you've got something which you call the Cabaçal Northwest Extension, or CBNWE. Is that inside the current resource at the moment?
Absolutely. Yes. So you've got the old mine, and then northwest of the mine, the Northwest Extension. And therein lies the problem, is that we knew that the drilling that we did and the drilling that the BP Minerals didn't cover the extent, the up dip extent and the down dip extent in the first resource calculation. So rather than sort of trying to spread metal, we were very conservative in that first resource statement. We got it out, it gives us the basis of the PEA, but everything that's pointing to it is future growth within that resource. There are, just within that resource, we've identified 1,600 meters of high grade trends to be infilled.
Do you have how many rigs do you have on site?
Just two. We've got 2 rigs. We shut them down for Christmas, New Year's Eve, and they're starting up this week again. And we've done 50 by 50 meter drilling, and then in some parts we actually did 25 by 25. We saw the benefit now, and we're debating this internally to further quantify it. But the higher frequency of angled drilling is directly relating to the higher frequency of gold and copper. We're actually seeing better results.
It's this is exactly the point that I'm just kind of grappling with in my head, is that perhaps it's and you just a minute ago you said that this is a very preliminary resource estimate. Is there not some benefit in really pushing that density of high grade drilling to get a better understanding of the grade across the 2 kilometers?
That's the point we're getting at now. I think the gut feeling is that next resource update, which hopefully towards the end of this year, we will actually look at completely covering the entire deposit 25 by 25. We've got to give in context. Within the mine environment, there's an extensive area where the top 20 or 30 meters have not been drilled with any angle drilling, but the vertical drilling is 12 meters by 12 meters. But we can't put angle drilling through old mine workings because the just won't. We'll go into the void, but then it can't go further. It can with vertical drilling. We've done that very successfully. So we're going to see near surface growth. That we have an area there, the top 20, 30 meters. That's almost the entire deposit where BP's just didn't assay, and we can get. We've had holes going 3 meters at 12 grams from 6 meters, high grade copper zones. But we just recognise that actually the potential upside in the last quarter of Q4. So, and then put this into the fantastic scenario for an investor. This is just one of our deposits, and it's certainly not the biggest anomaly we have on the belt. So when we look at longevity, the multiple upside presentations or potential prospects that we're identifying now. We had one of our largest projects granted just in December. I couldn't announce it in the middle of the financing. We announced that last week, and that was 4.5K, or I think it's 4.5 kilometer linear, or 4 kilometers of linear conductivity, and we're now walking on top of that and finding copper gosons. So, alone you could probably IPO a company on that trend, but when it's just part of our trend, part of our metal package, the upside and we're not looking at a small junior company, we're looking at a mid-tier company that's nascent.
So, Gilbert, where was that trend you said with all the copper gosons, the 4 kilometres? Is that off to the northwest?
Yeah, it's one of the many trends we've got there. I think in the northwest there's about 3. I think we have identified 3 high-grade trends to date, and there's another high-grade trend in the southeast. And this is this infill frequency. Like we had another hole which is in the middle of the northwest extension, hole 54, and that was another 50 meters at 2.2 grams gold, or it's just ridiculous numbers we keep pulling out. And then we drilled 50 meters to the northwest and 50 meters to the southwest, and it's pretty average. And we now see that we're further to the northwest of that hole, we've infilled adjacent holes to average holes. We put out very good numbers, and it's just a reflection of the drilling density. There'll be swings and roundabouts, but what I really like most about it,
and also variability.
Yeah, no, but there's the only thing I'm seeing very positive, and we'll confirm this, is that I'm not seeing any variability in the metallurgy. It's consistent. We did a very widely spaced sampling program for the network. We didn't just and that's the trick I've seen a lot of people do. They take their high grade and just do their network on the high grade because that looks really good. We put it across the belt. So what I'm getting at there is we won't see that variability in the network, and it's not so much. I wouldn't say there's variability in the mineralization. It's the same host rocks. It's a feeder system that's been printed by high grade gold. It's just that I think there's more metal to be brought into this deposit than people realise.
Okay, which makes me ask a question about your budget allocation, because if you've got this envelope around your existing mineralisation, and you strongly believe that you can improve the understanding of grade within that envelope, that speaks to spending a lot of money on infill drilling, and you've hinted at that, or you've said as much in the fact that you're going to drill at 25 meter spacing. In your presentation, you also talk about near mine exploration and regional exploration, and I just wondered whether you've, as a company, whether you've actually allocated percentage-wise of your budget, or what you're looking at in terms of dollar spend into infill relative to others.
Yeah, we do allocate. Like we've got the 2 rigs, and as we progress the infill program, we actually have 1 rig that'll be bouncing around different projects just to continue to test the upside of the project. Our discovery costs on Cabaçal, the main deposit, are about $3.50 an ounce. We're a pretty thrifty company. We don't tend to, company policy, we don't fly business class. That's a waste of money in the first order for a junior mining company. So we tend to put most of our money into the ground, Merlin. And I've seen enough companies blow up their budgets just in lifestyle. So we keep we allocate, we've got a budget allocated for this year with the money we raised. But we're reviewing it's important that we're reviewing the quite successful exploration results from the infill drilling results from Cabaçal. It's an amazing project where you can take a soil anomaly, which was an 8 gram soil anomaly, 2k southeast of Cabaçal, and we put a hole in just to sterilise it for a potential tailings storage facility. And we discovered in a brand new gold, silver, precious metal system. I think sometimes you have to change your exploration concept and just give it to the engineers and say, go find us a waste dump and we'll drill it up and find an ore body. Maybe that's what we should do. I don't know.
Maybe that's what. Well, I'm a geologist, so I wouldn't say that.
But you're right. We allocate and we revise our budgets to ensure that the best practices are maintained and the continual equity growth and project growth occurs.
Remind me of your cash in hand. Your presentation says 11 million, 11.3, I think it does.
At the end, I think what we found, we assigned a property payment, which is $1.85 million US. That's gone into escrow. We had a lot of end of year invoices, so I think we'll come into the year with circa around $7.5 million to deploy into the project. Look, we are a small cap exploration company, and of course, small cap exploration companies are dependent on capital raising. But we've always done our capital raisings. We work closely with our banks. We generally always have a strategic long-term or an existing long-term lead order, which is important. And we don't spray equity into the market. We've never done that. And the last capital raising, I agree with across the board, but I think we had, was it 6 federal US banking rates last year increased, and we had a vastly overvalued US dollar. Now that just killed commodities. There's nothing you could do, you know. It was practical.
But we're now in the rebuild phase, and so you know you've gone from 35 cents to 44 cents. Looking at the kind of the value catalysts in the next 3-6 months, you've talked about the PEA coming out, and also kind of working on pulling that overall grade up through infill drilling.
Well, there's a couple. It's actually quite. You've hit it right on the mark. We want to have a PEA that sort of gives us. Well, I can only go past. I can't actually say a physical number. I can reference a number. So I'm saying, look, some of the mining analysts are looking at. They're saying around the 400 million mark, IRR above 35%. That gives us a share valuation. I think the variation is somewhere between $1.40 up to about $2.20. I like the $2.20 one much better than the $1.41. And I think that's a good approximation of where the PEA will land. But what the PEA, I think, is going to clearly communicate, and this is what I like, is this is going to be a rapid payback because we have this high-grade starter zone. I think there's some 3 million tonnes, about 2.4 grams gold. And we've got to mine, and the Whittle optimization will optimize that mine plan. And look, I encourage all my investors to actually have a look on Google and understand what these Whittle mine plans. This is bread and butter for mining industry, but they've got some really good educational YouTube videos on Whittle. And guys, have a look at it, and then you'll really understand what mining's about and what the mining schedule is about. But there's certainly, you know, at 2.5 million tonnes per annum, you could probably go for 25 or 30 years. What you do is you go into year 3 or 4, prepare the increased throughput for your mill, and then you bring that volume up and you shorten your mine life down to say 15 to 20 years. And again, that's just one of our prospects, well, one of our deposits. We have a second deposit. We can say we've got a second deposit with the Santa Helena. So it's the value, the equity growth in this one. Look, I talked about this previously. You know, there are companies out there that got $3-4 valuations. Good companies, good management. We've had their projects a lot longer than ours, but I can't see anyone going to get, you know, 3, 4, 5, maybe 10 times the equity on that. But with our share price, you know, we're trading around 42 cents. It's just ridiculous when we look at, we've got 2 million ounces in the ground and the best metallurgy in the industry, and within the mining license, mining up lease applications.
What's the oxidation profile like at Cabaçal? I mean, because you talk about producing a sulfide con, but you don't talk about the oxides.
Well, it's actually quite interesting. So the soil layer is only about, it's very technical, about 50 centimetres. And that, of course, was drink water. Copper in soils, there's not enough tonnage for an oxide plant, so that's not going to happen. Then the transitional zone is probably down 15-20 metres. But we didn't have any network on that transitional zone, the tarnished sulfide. So we actually assigned 0 recovery for the copper in those zones. And we'll do some testing on that, and we might get in the very small layer, I don't know, 40-50% recovery of the copper. You know, who cares?
So the actual oxide zone is very, very shallow.
Oh yeah. And then you go into transitional. And then after 15 metres, you're in fresh crystalline rock.
Okay.
Amazing.
Well, okay. Yeah. I mean, it's not what you'd expect for Brazil.
No, absolutely not. We're in the very edge of the southern edge of the Amazon Craton. I think we're in the Amazon Craton. I have to check that one. But we are greenstone belts, and it's interesting that this doesn't have this massive weathered profile. It really is. It's not like the regolith in Western Australia. I guess you could take an analogy. You take the greenstone belts in Canada and you remove the 100 metres of till, you've got a very small transitional sulfide layer. We've got something similar. So that's why I keep going about the metallurgy. We don't have to strip 10, 20, 50, 100 meters of waste rock to get to our payable dirt. Our payable dirt starts from 3 meters below surface with the gold, and then after 20 meters for the copper. Amazing. Yeah.
So, when I think about it, I see the greatest value within that 2 kilometers of Cabaçal. I'd be tempted to put 80% of my effort or more into advancing Cabaçal Main and less than 20% of my effort in proving up the regional.
It's really interesting. I'd actually say that's pretty much on the head. That's absolutely correct, because let's just put it in perception. The one that's going to come into cash flow positive first, with subject to all permitting, and I'm going to say subject to all permitting and economic studies, that's Cabaçal. That's going to get into cash flow first. Absolutely agree, and focus on that, which is very much an Australian model. And the Canadians will always say, "We've got to drill. Good model." The benefit from us is I can't say today that Cabaçal is the biggest deposit, and it's 2 kilometres long, and probably got a mineralised envelope of about 100 million tonnes. We've got 60 million tonnes of inferred and indicated, another 30 million tonnes of non-classified, and some of it's open. So it's big, but is it the biggest deposit in the Cabaçal belt? Don't know. I honestly I don't know. And so that gives us the flexibility to start at 2.5 million tonnes, knowing that we're probably going to go to 3.5, 4 million tonnes per annum mill. But that mill could then be in producing at that volume for decades to come.
It's like that old adage, when someone asks in some very rural part of the countryside, and they ask the old farmer, how do you get the direction? How do you get to the big town from here? And the farmer goes, "Well, I wouldn't start from here." In a sense, you have to start from here. You have to start from here. Perhaps if you're approaching this from a completely fresh start, you would cast your exploration net across the whole Cabaçal belt, and you would look for the best anomaly. You look for the potentially the biggest resource on the belt. As it happens, you've got an old mine, and this is where you started, and you've got 1 million ounces, 1.8 million ounces on the go.
It's actually over 2. But what I'm getting at there, what you just said is exactly what BP did. They cast their net across the belt completely. But what they did is they then vectored in on only anything that was above 3 grams gold. So if we had 1% copper or 0.5% copper at surface over 3-4 kilometers, not going to touch that. We want to focus on plus 3 gram gold, because when they were doing their exploration and then discovered Cabaçal, I think the gold was probably around, when they started, gold was probably about 200 an ounce, and when they left, it was at 290 an ounce, and copper was less than sort of 80 cents a pound. So there was completely different economics. Now, when we look at today's economics, I think we're at 1910 or 1905 for gold and 420 for copper. If you're an underground mine trying to develop something 1,000 meters deep, this is going to help you. For us, it just smashes it, because we're producing copper very, very quickly. And I think that it will be quite an interesting reception when we put the PEA out, because I can't recall for some time. I've got my dog scratching me of such a big belt coming to the market, and it's really sort of your comment prior on the resource statement, because we reported it as gold, and that was a reflection of the gold overprint, which we find over 11 kilometres. But I can't recall anyone bringing an entire belt of open pit potential for a long, long time. Well,
we've seen it. There are others out there with belts, and we've also seen their share prices. I mean, we were talking. There's a I won't name names, but we know that there are companies that have regional potential and belt-wide potential, and a share price that doesn't respond, and that's a function of having a clear strategy of advancement and development and a budget to carry it out.
Yeah, and I can, some of those companies, the benefit, why we stand out compared to those companies is a lot of those companies don't have I think you look at our cross section on the technical presentation from the website, and you can do your own maths. The pre-strip in this is going to be very small. We've said to the market that our energy grid is 100% hydroelectric, and we're going to be using 4.25 cents electricity. So our OPEX is going to be very small. Our rock is very soft. I see these guys when they say they've got a bond work index of 18 and 19. I'm going, and they're going to grind it down to 10 micron. Walk away, people. Walk away. Ain't going to work. I'm sorry, guys. We have done this for 20 years, looking at these projects. Just going, oh God, there's a difference between building a mine and mining the market. And Meridian is building a mine. That's the fundamental difference here with a lot of our competitors. Some of these guys are good, honest men and women. They're very focused. There's a few scoundrels out there, of course. But Meridian, I just can't see a deficit in it. We did a very severe red flag report when we first looked at the project, and we've delivered everything. What took us by storm was the high grade gold overprint. That really just changed everything. It didn't change the product. It changed how we reported it because it was so much gold. But at the end of the day, we produce a copper concentrate that takes 80% of our revenue. And it's these little things that you have to look at. Most copper smelters make 10 or 15% of their profit from sulfur, from acid. And you can't make acid if you've got phosphorus in your concentrate. We have no phosphorus. We have 30%, 32% sulfur. It's perfect for acid. So for the smelters, they make money hand over fist. For the traders, they'll take this concentrate. And the principal concern now for the smelters is emissions. So we've got a clean concentrate. They can blend that to decrease the emissions. So it's our timing, when you look at copper concentrates coming on.
And where just I know we're getting into the weeds, but where are your copper smelters that you would like to send this to? Is this going to the European copper smelters, or?
We've done two. I have regular conversations with some of the colleagues in the smelter industries, be they in Japan or Europe, and so they're aware. We have done two net smelter return cutoffs, mine gate. So there's not an overriding difference for us where we send it. Be that we even send it in country, because there's some interesting corporate commodity business being built out of Brazil at the moment. But your principal concerns in Asia, be it South Korea or Japan, are the smelter emissions. Now you look at Europe, they've for years been fed dirty concentrates out of the Iberian Pyrite Belt, and that's why I've said many times, Rubis has the mercury recuperation towers in Hamburg, because they actually have to deal with that, and that's getting more and more difficult in some of the environmental regulations. And that's why, if you've got a dirty concentrate and you need to get your emissions down, you blend it with a clean concentrate. And Meridian, what was said, and 43101 and elsewhere, this is an incredible concentrate. It's a copper mine that has been overprinted with very, very high grade gold. We've had 26 meters at 20 grams gold and 0.3 copper. It's incredible. That 26, say for instance, that's hole 49, that 26 meters at 20 grams gold, 20% of that's going to go into a gravity anomaly, the rest is going to go into the copper concentrate. So, it's commerciality. That I think what you talked about, the other groups, is real commerciality. Will it be built? Yes, this will be built.
Good. Well, on that note, I can say that I look forward to talking to you again once the PEAs come out. I'd like to catch up perhaps when that's out, early April. that'd be super. I'd love to kind of get a better understanding of the numbers around it. And in the meantime, good luck with drilling out those the angled holes and the 25-meter centers inside those 2 kilometers. That sounds like a great plan.
Yeah. Thanks, man. Appreciate the time today.